Pattern recognition is your processor. You see structure, you recognize patterns, and you build conviction visually. Visual dominance gives you strong chart intuition, the ability to recognize setups quickly, and spatial understanding of price movement. You process things on an intuitive level. You're getting the answers to things often in ways that you can't explain, but your desire to be able to explain them is what causes you to overanalyze and slow down. The optimal version of you would see it, feel it, and go. Nothing more. The rest of it actually slows you down. Let's get started. I'm going to bring David Seiler on. We're going to go through a hot seat together. Dave is having an excellent year. He's up 124R this year with a $2.64 expectancy. He's got 87% win rate. His average win to average loss, it's over 3. Dave is an analyst, so he's data-driven. He's patient. He's detail-oriented. He is risk-aware. Dave is disciplined. Dave does work very hard, and Dave does have an edge. But there's an internal conflict with him, which is capping how well he can do. If it doesn't get resolved, he has a ceiling. Dave operates under inherited fear and constraints around money and risk. Dave has 2 competing identities that are running simultaneously. Identity 1 is Dave's true self. He is a visionary, he's independent, he's a builder of wealth, he's a long-term thinker. But then Dave has his inherited pattern that he got from his parents. His father's risk-adverse, he fears bad decisions, he's worry-driven. His mother's debt-adverse, safety-focused, avoids discomfort, and avoids challenges. So the combined imprint is to preserve first, avoid mistakes, and do not take unnecessary risk. The internal conflict, what's happening inside Dave when he trades, is his vision says, take the trade, build the wealth, trust your edge. But his conditioning says, well, what if you're wrong? What if this is a mistake? How this shows up in Dave's trading is he has overanalysis before entry. He needs one more confirmation. He delays execution, not because he lacks skill, but because he's trying to avoid being wrong. He has conservative position sizing. The likely behavior results in undersized winners, not pressing his edge and prioritizing safety over growth, the worry about the bad things that could happen. There's emotional reactivity of loss. In trading, this becomes frustration after losses, self-judgment, and potential revenge tendencies. The real trading diagnosis is Dave is a high-quality analyst trapped in a risk-avoidant identity loop. He doesn't need more strategy. He doesn't need more knowledge. He needs permission to take risk without threatening his identity. Dave's parents taught him that money is something to protect, something to manage carefully, and something that can be lost through bad decisions. But trading requires that money be a tool, that it's something to deploy, and it's something that must be risked to grow. This mismatch creates hesitation. You have a false sense of I'm not ready yet. Because you're analytical and visual, you may feel like I understand it, but I need to understand it better before I act. It's not true. That's just your system trying to convert visual clarity into logical certainty. It's actually degrading your edge. Pattern recognition is your processor. You see structure, you recognize patterns, and you build conviction visually. Visual dominance gives you strong chart intuition, the ability to recognize setups quickly, and spatial understanding of price movement. Visual thinkers don't need linear logic to get it. They just see the answer. You process things on an intuitive level. You're getting the answers to things often in ways that you can't explain. But your desire to be able to explain them is what causes you to overanalyze and slow down. The optimal version of you would see it, feel it, and go. Nothing more. The rest of it actually slows you down. You build conviction through seeing, not thinking. The more you see it, the more conviction you're going to have to take it. You see the setup instantly, but then you analyze it deeply. Then you hesitate. Your first read is often right, but your analysis either delays or kills your execution. You should trust your first visual read. My first recognition is valid. You don't need more strategy. You don't need more confirmation. You just need to trust what you see. If I can clearly see the setup and it meets my criteria, I act without adding any new analysis. No new thinking once the setup appears, only executing. Right now, losing trade equals bad decision equals a hit to his identity. Adopt this belief that taking a planned loss is not a mistake. It is just a cost of executing my edge. He needs to separate being wrong from his identity. Losing trade is just part of an executed plan. When I looked at your data, what's your typical position size? $500 risk per trade. When I look at your data, to me, I see your win rate will not hold. Do you feel like you can repeat those? So if our win-loss ratio could hold, let's just say we can hold it at 3-to-1. You want your trade frequency to be profitable. Even when you're having more losers come through, you're making more money net. So we want to push more through. If Dave wants to go from his current level to doubling his returns. What does he need to do? Increase his position size. Doubling the position size, going to $1,000 risk, doubles Dave's return. Radical would be 5 times. He's got to trade 5 times bigger. 5 times bigger is $2,500 risk. Now he's literally making 5 times what he made so far. If we go to impossible would be 10 times. If he goes from $500 to $5,000 per trade, he'll make 10 times the money. So Dave, I want you to think for a second, how would you feel if you made 600,000 this quarter trading? It's the first feeling you felt in your body when I said that.
Shock.
Why is it shock? You have the performance that takes you to that number. What's holding you back between where you're at and that number?
The scarcity mindset.
Exactly. The scarcity mindset is what's holding you back. Not your talent, not your discipline, not your work ethic, just your beliefs about money. I had a belief that if I didn't put enough effort into my trading plans, I did not deserve to win. That actually completely diminishes 35 years of work and a million patterns looked at. My brain is already fucking wired to go. The plan became my story that actually inhibited me. The reframe is, I don't need a plan to make money trading, but the plan helps me trade better. The rewards you get are not going to be linear by the hours that you put in. In many cases, we trade better putting less hours in because we could be more focused.